Alright, so welcome to the support and resistance video. So, like I said, this is the style of my, or the foundation of my trading style, so it's really important you take a lot of notes in this video. So, to begin with, support resistance can be found on any time frame. Some areas of support may be respected on higher time frames, but on lower time frames, it may look like it's broken. So if you draw an area of support for one time frame, it's only valid on that time frame. You can't look at it on every other time frame. It's only valid for that time frame. So let's say if I drew an area of support on H4, then it's only valid on H4. It's not valid on H1, it's not valid on M30, it's not valid on the daily. Even though you may see that it may respect the same area, it's still not valid. It's only valid on H4. But that's when you have to draw your own support resistance for each time frame. That's where color coordination comes in play. So, to begin with, you have your support, which is your floor. Support's always going to be the floor. And resistance, which is the roof. So let's say the market's in an uptrend, right? And then we hit an area of resistance and it starts coming back down. That's resistance. You may see it retest resistance multiple times or consolidate before, finally rejecting that area. And then same thing with a downtrend. You hit an area of support right here. It may consolidate in this area or break it, retest it, and then continue on its downward momentum. Now, you have your three main forms of support and resistance. You have your touch. Simply the market comes down, touches it, and then bounces right off. You have your gap. Oh, and by the way, for an area of support and resistance to be valid, it needs to be a support and a resistance. So what does that mean? If one side touches, there has to be a resistance on the other side. So here's a touch right there. Right? That's valid. Right? This is only a valid support. But this would be more a kind of a random line support. So you have your gap. Simply, it just gaps the area of support and resistance. Then you have your overlap, where it overlaps the area of support and resistance. Now, broken and overlap are two different things, right? This is where we're going to get into tested candles. We're also going to get chart time with this as well. So, this is where we're going to get into tested candles. So, pretty much, this is what broken area of support looks like. Since these are bearish candles, this means that it broke the area of support. So one bearish candle formed on the area of support, and another bearish candle formed and closed on that area of under that area of support, meaning it broke. This is respected. This is called tested candles right here. This is tested candles. So pretty much touch the area of support, then you had a bullish candle and pretty much went in the opposite direction. So just like that, right? So tested candles again on an area of resistance. So we had a bullish candle, and then we have a bearish candle come and pretty much start going in the opposite direction, right? That's a respected area of resistance. Now, broken resistance, it's pretty much the same thing as a broken support. Here we have a bullish candle, came, closed, and then it closed right over it. So that's broken. You can also see a lot of broken candles like this, or you could see broken candles that look like this. This is kind of the more ideal broken candles, but that's pretty much it. So when an area of resistance or support is broken, it will continue in the direction that it's going in, either down or up. So it's all pretty much the same thing. Now let's go look at some examples on the actual chart. Let's delete this. Alright. Okay. So as you can see, we're going to be setting up our major support and resistance on the monthly time frame in the next video. But in this video, we're just going to be looking for tested candles. So as you can see right here, these are tested candles. perfectly. Then it started going in the opposite direction. So here's an area of resistance, tested candles, and then it went in the opposite direction. Now over here, as you can see right here, there's an area of support, because right here, this is tested candles. These are tested candles. So you can see it then came down, respected this area of support, which, as you can see, you could find an area of support here. There's an area of resistance right here if you just simply follow the cursor. So it's as simple as that. Now, as you can see, it looks like it's breaking this area of support. So that's what broken support and resistance looks like on there. So now let's actually go to the hour time frame. So tested candles yet again right here. You can see tested candles, and then went in the opposite direction, came down, and this is another form of broken support resistance. So here, this is your touch, this is an overlap, but then it came down, engulfed our previous bullish candle, closed, and this candle formed under the area of support. So that's broken, right? So here we have a touch, here we have an overlap. Okay, so now on to over here. Here's another area of support and resistance. As you can see, here we have a touch, here we have an overlap, and here we have a gap. Simple as that. Most of the time, a lot of the times, the wicks don't have to touch, but when the wicks do touch the area of support, that's fine. That normally happens when the market is gapping that area of support or resistance. So that's pretty much about it. Now, as you can see here there's an area of resistance. Boom, done. Just like that. Area of resistance, as you can see later on, this area of resistance was broken. This is broken. It's as simple as that. So here's another area of support. Actually, all throughout here there's an area of support. So as you can see, this is an overlap, this is a gap, this is a touch, this is an overlap, this is a gap, this is a touch, and then this looks a little too far to be a gap, but it very well could be. But as you can see up here, we have an area of resistance. So you can see the market came up, this candle closed, right? This is why you don't buy immediately. So if the market were to come up and close over, another candle could easily come right back down and overlap that area of resistance, and you would have just bought for no reason, and you would be in drawdown now. Now, as you can see, once this candle came and closed over, right, that means it broke the area of resistance, then came back down, retested the previous broken resistance, which is now support, tested candles, and a bullish engulfing pattern. So as you can see, support resistance is fairly simple. Now, obviously, practice makes perfect, so keep looking for areas such as these, and pretty soon you'll see that you're mastering your support resistance areas. So I will see you guys in the next video.